Boy, now that was a bull trap, wasn't it? What a reversal off the high. Well, it's back to work here tonight, guys. Thursday evening, getting ready for Friday's trading session. Hope you guys had a great day out there. We got one more day left. I want to make sure we make it count tomorrow. We get some big news tomorrow. We get some great setups, some tracking for all of our favorite markets on Friday. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in, a very important video here tonight. Before we get this party going tonight, though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload, so definitely make sure you subscribe. And if you guys enjoyed the video tonight, do me a favor, will you? Hit that like button. I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Friday is not going to trade itself. Where are the money-making trades for Friday? We got one day left. Got some big news coming tomorrow. And boy, oh boy, some really nice opportunities setting up here on the Nasdaq, the S&P, and the crude oil. As you can see, a lot of ranges in the charts right now. Range on the Nasdaq, range on the S&P, range on crude oil. I love ranges because ranges give us great opportunities every morning in our trade room. And we have a lot of bullish momentum rotating off the lows of these ranges right now. Now, we are still overall bearish, and we definitely anticipate bears will be trying to step in and short these things back down. So we definitely do have some selling opportunities here. But I'll tell you, these are the situations we see ranges, and rotation off the low. These oftentimes do produce some very strong bullish breakouts. So we definitely have some buy-side breakouts I'm tracking. And we actually saw something today that we haven't seen all year on the Nasdaq and the Emini. And so we may have another leg lower coming tomorrow. We definitely have a lot of bears in this market right now. So I certainly will make sure we know how to trade some breakouts going lower here. I'm going to cover all the details in tonight's video. That way you get a game plan to make some money on Friday. Now, speaking of Friday, though, we cannot go any further until we talk about the schedule for tomorrow, because tomorrow is a very, very busy news day, especially for a Friday. And we have two major news events tomorrow. One is the personal income number, one of the most watched inflation reports from the Fed. That is arguably one of the biggest news reports of the week this week. It's called the PCE deflator, personal income, personal outlays. That is definitely the biggest scheduled news for tomorrow. Later on in the session, the Chicago PMI number at 9:45, the Purchasing Managers Index, another inflation number. And of course, we know everybody is obsessed, including the Fed, with inflation. Those are our two big scheduled news reports tomorrow, 8:30 and 9:45 from the personal income and Chicago PMI. Then you'll also notice too, we get a bunch of Fed speakers. We got Barkin at 8:30, but more importantly, the vice chair, Lael Brainerd. She'll speak at 9 a.m. tomorrow morning. She probably has the biggest potential to really shake these markets up if she breaks ranks with things we've heard from Powell and the rest of the crew earlier on this week. So really, boy, that 8:30 to 9 o'clock block there, when we got personal income, followed by Lael Brainerd. Remember, she's the vice chair, right? She's the second in command behind Jerome Powell. Those really could be a powder keg of market catalysts for us here tomorrow. And also, too, a couple more things you want to keep in mind, too, right? Tomorrow, we also have the EU Energy Summit talking about price curves or talking about capping Russian oil. We will be listening in. That will definitely be another kind of impact player for the oil markets. Keep an eye on that, the EU Energy meeting on Friday as well. And then just to put a cherry on top, don't forget, tomorrow is the last day of the month, last trading day of the month, last trading day of the quarter. So we do expect there to be an uptick in volatility as well, right? As we've seen quite a bit of volatility Wednesday, Thursday, and we expect more of that volatility coming here for tomorrow. So again, the big items you want to be aware of tomorrow are the personal income number, and Lael Brainerd will speak at 9 o'clock Eastern time. We get the Chicago PMI at 9:45. But I would imagine those two are the ones that will be potentially the biggest catalyst for us tomorrow morning. We got the EU Energy meeting tomorrow. How much will that affect the price of oil? And of course, the end of the month, end of the quarter volatility. It does sound like Hurricane Ian is not really affecting the oil producing part of the Gulf of Mexico right now. Of course, Hurricane Ian regaining its hurricane strength as it broke higher to places like Georgia and the Carolinas. So people are definitely not out of the woods there, but it doesn't look like that storm will be impacting the markets that we trade tomorrow in our trade room. So probably not going to have much more of that. But again, we got that EU Energy Summit on Friday morning as well. So that's another catalyst for the energy futures, right? The oil futures for tomorrow. So boy, oh boy, we have a busy, busy day tomorrow. Should be plenty of catalysts tomorrow for us to work with across all of these markets. Now, back to our charts, right? Because now we know the lay of the land tomorrow. The charts are where the money is. The news will give us that catalyst. The charts will tell us how to trade the reaction. Now, I'm going to go over all my favorite trades on each of these markets here tonight. Whether you trade one of them or you trade all of them, make sure you watch all the way to the end because you'll learn something new throughout the entire lesson this evening. I'll provide different trade ideas, different strategies as we go deeper, and I do try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. I'm going to go NASDAQ, S&P, and then crude oil, grab some notes, take some screenshots, and drop me some questions in the comment section if you guys have any questions. Let's jump into the NASDAQ here. This is the NASDAQ or the QQQs or the micro NASDAQ. This is a 5,000 tick chart in the upper left-hand corner. You'll notice I did increase the tick chart value here tonight because the volume was so high, right? You'll notice that sometimes I will use slightly different tick charts on these videos, and that is to make it easier to provide the analysis, right? Makes it easier, quiets down some of the noise here. So 5,000 tick chart. And keep in mind, too, everything we talk about on the NASDAQ can pretty much be applied to the S&P and vice versa. They are very, very similar here consistently these days. So I'll try not to repeat myself too badly, but be aware what I talk about tonight in the NASDAQ can be applied to the S&P and vice versa once we get down to the E-mini S&P. There are 4 key insights that are telling us likely where the best trades are going to be here for tomorrow. The first one is the overall bear bias. Look at a daily chart, look at a 60-minute chart, look at a 4-hour chart, and you will see we are very much long-term bear bias. So we do have to respect overhead resistance. We have to respect that long-term bear bias, and we'll talk about how to use that as we go deeper into this video. The next thing is also a very important clue, and that is a strong move that's been retested. You'll notice we had that strong move down about 10:30 this morning. We pulled back and retested. If you watch these videos, you know I'm always talking about anytime we see a strong move in one direction, we expect to pull back and a retest of that low. Once they retest the low, we call it mission accomplished, right? So now the bears kind of got what they wanted, and really at this point, it now looks like the buyers are going to try to rotate this thing back up and take out some of these highs up here. Now, if the buyers have enough juice to them, they could push this thing right back up into that range overhead, and I'll talk about more about that here in a moment. At the same time, too, anytime we see a strong move, if they can break through that low, which it does not look like they're doing very well right now, that could be a breakout going lower. So right now, we got that strong move down. They retest. They're not doing a very good job at breaking through it, and it does look like these buyers now will get their shot to punch this thing back up in the opposite direction. Again, bears will be waiting up around those highs, though, so we do need to be aware of that. With that long-term bear bias, that is something we have to respect. The third key insight, and what might be one of the biggest clues on this chart, is exactly what we talked about in the intro, and that is that range. It's basically a bear market into a trading range. Price pops up, goes lower, and ranges, they like to rotate, right? Ranges will rotate back and forth like this. Like I mentioned, whenever we see rotation off the low, okay, this oftentimes will give the buyers in this case enough momentum. Again, we do expect there to be bears up here, but it gives the buyers a lot of opportunity here to punch this thing definitely back up to last week's close. That range acts like a magnet. As we get closer to the end of the week, we oftentimes start using those last week closing prices as magnets. So buyers have a lot of that. And then just to throw an extra cherry on top on this, the multi-day trading range. We talked about this last night on the video. It was the reason why we anticipated that reversal off the high, right? Tough because it was so strong, but once they got that kind of reversal off it, right, it was pretty easy from there. Anyways, we have a long-term or a multi-day trading range. We talked about this last night. This is one big trading range. The market is basically rotated up, rotated down, down, rotated up, and now rotated all the way back down. We're sitting at major support levels. Again, we are very much long-term bearish, but this gives the buyers a ton of opportunity here. And when you combine this with the range rotation off the low, when you combine this with that strong move that went lower, retested, and struggles to go lower, this is why I said there's quite a bit of bullish opportunity here for the buyers, and we'll talk about how to make money on that here on this video. So, knowing we've talked about so far, and again, the S&P is very, very similar to this as well. Where's the money making trades on this? There's a lot of ways in which we can trade this as it goes higher. But the most important thing I think you want to keep in mind is, again, that long-term bear bias. I'm taking the amount below the range tonight. I'm projecting it higher here, and that really is kind of capping off what is really just an overall area of resistance. Now, we can assume that bears are going to try to be selling up in this area back down again. We also know there's a lot of momentum as it comes off of that low. So we have to be careful if we want to be a seller. What you want to look for is as we go higher in these situations, I always tell my students in our trade room, be very careful not to get steamrolled because you're trying to sell at resistance. It's the right idea, right? The right idea, it's bearish into a range. So it's the right idea to sell resistance above the range, but when it rotates off the low like that, it's a lot of momentum. So what you want to do is the best way to short this thing is we have to basically trap in some of those buyers. We have to anticipate buyers are going to come in and try to buy that thing. And because that momentum is so strong going higher as it rotates off the low, we really got to use those buyers' stop losses as fuel to go back down again. To do that, we're going to use what I call a crown reversal. That is the buyers trying once, the buyers trying twice, and getting that trap high. The trap high is really an important part of this because you want to make sure you're selling as high as you can because, again, that momentum will be coming in off of that low. This really is the only way I would feel safe selling off of that high, again, trying to combine overhead resistance with that trading range. Crown reversal, that's the best way, the safest way to sell this thing. And again, we're going to find out how much these bears really want this when they get back up around that 11,300 area, give or take here on the Nasdaq. Same thing applies again on the S&P. But now let's get serious, right? Now let's think about what if the market punches and runs higher. There really are probably 3 different ways we can buy this if they can break through this key area of resistance. One of them would be, let's say we do get up into those highs. Let's say we do pull back, but the buyers don't try twice and fail. The buyers step into this and they just crush it, right? And they blast this thing running higher. Once we see those buyers hold, that becomes a 1, 2, 3 breakout. And those breakout patterns are really, really easy. You can mark off the trend line off the high. You can find a channel off the low, and you can drill down. I always try to find a prior swing level and try to find my entries off the low of that channel. Now, guys, these entries right here, I'm not going to go over the entries here tonight, but these could be traps. These could be failures. They could be pullback combinations, all the same entry setups that we talk about, the price action patterns, the ones we talk about in the free trading course on our website. You can, right, those are the same patterns I'll use at the low of that channel. Where would the buyers want to go? Right? The buyers have one thing on their mind. They want to go back up and they want to go right back to where we were 24 hours ago, right? They want to run this thing back up to the opposite side of that trading range. That's a 1, 2, 3 breakout. Here's another one. Let's say now the market pops up and begins to grind and grind. This is very common whenever we see like a reversal like that, right? Because what might happen is the bears, they may walk away from this, right? They may see the writing on the wall and say, I'm not touching this thing right now, right? And the market may just simply start to grind and almost melt higher. When that happens, very simple. Draw a trend line right off those highs, bring it down to that big low down there, right? It'll be a nice, steep, almost tight channel there. And then again, look left, find some prior swings. I always like to get below those prior swings because that's where traps live. And then get below the moving average because that's where failure patterns live. And then as we pop back above the moving average, I can use the pullback that's where pullbacks live, right? So again, these are the same patterns you guys have learned inside the free course, right? So traps, failures, and pullbacks there. Love that one. That's probably my favorite one possibility here for tomorrow, that little pop and grind as we go higher there. And then the last one you got to be thinking right now is let's say the word gets out, we've got rotation off the low, we got a failed breakout going lower, big time range low. Let's say the word gets out and the market simply punches, right? Strong punch higher. Anytime we see a strong move, a shallow pullback, and a higher high in price, that gives us what? Traps, baby. Now, this, of course, is the most aggressive one, but again, you'll see it. You'll see a lot of these, right? Strong move, shallow pullback. The shallow pullback is what drives buyers crazy because they can't get into it. And the higher high, right, is a tease, right? The higher high is like, oh, I'm going to miss it. It's basically a FOMO. It's a fear of missing out trade. I call them a two-try trap or a two-try breakout. Now, as you can see, we're talking a lot about traps here tonight on this video. Traps, failures, pullback combos, right? Okay, I know a lot of you guys have taken the free course on our website. You're using these pattern setups. You're making money on your own account. But I know a lot of you guys are here for the first time tonight. So if you haven't taken that free class yet, if you're one of the few, what I'll do is I'll put a link up here in the upper right-hand corner. Grab that link, get registered for our free trading course, learn that strategy, because the strategy that I teach in that free course will help you find so many more easy winners, help you easily avoid losses, and most importantly, it'll give you a ton of confidence because it'll give you a game plan to follow every day. If you're missing the best trades each day, if you're taking too many losses, that free course will be perfect for you. It's perfect for someone who's trying to make the jump into full-time trading. So grab that link, learn the setups. That way, the next time you see that strong move, that shallow pullback, and that higher high in price, you'll know exactly when to take these trades, you'll know the rules for it, and you'll also know when to avoid them, right? So those are some easy ways to buy this thing as we go higher. So I like the way this thing sets up. Again, be very careful though, because again, with that long-term bear bias, they could easily pull it up, run it up, right, and drop it right back down. Now, good question. What happens if they do that? What if we get down to these lows? Can I buy it back up again? I definitely can. Wait, can we sell the breakout going lower? Yes, we can, right? We're overall bearish right now. I do want to be prepared if this market was to roll over and run lower, right? What if it opens up? What if we open up and we just tank, right, and run lower? How do we make money on that? Let's get ready for that direction now on the S&P. Again, the S&P will be very, very similar here to the NASDAQ. We basically have the same four key insights: a big long-term bear bias, a strong move that has retested. And again, remember, when we get those retests like that, if they don't break through and break out, they're going to want to go where? Back up to retest that high. And that opens the door wide open. We have that range rotation off the low. It opens the door wide open now for the buyers to come in and punch this thing, right? And just get a slingshot this sucker going higher. So again, the bears, they're definitely sitting right there going, just try me, right? The bears are sitting right there going, I'm going to look to sell that thing back down again. You have to expect that. But again, the momentum on these are very typical for nice big bullish reversals, these rotation off the low. And again, that multi-day trading range, right? The same thing we talk about on the NASDAQ, right? I'm really down at multi-day range lows here right now. You'll notice if we zoom out a little bit, you can easily draw a trend line down off those lows, up off this high. It doesn't take a rocket scientist to see this, right? Up, down, back and forth. We talked about this last night. So the reason why this market collapsed off the high last night is the same reason why the buyers have a ton of opportunity. Not a guarantee. Again, we're still very bearish out there. We got Lael Brainerd tomorrow morning at 9 o'clock. We get the PCE number tomorrow, a huge inflation number tomorrow. So this may not have the legs it needs to have. So let's talk about this now, right? What if we go lower? How do we buy it? How do we sell it? Well, listen, if we go lower here, we are now, if I want to be a buyer right now, I'm basically buying against the short-term momentum and the long-term momentum. Okay, now the good news is you're at major support with a range above you. So that's the good news, right? It's a great place to be a buyer, but in the current market climate, it might not be an effective place to be a buyer. So what we have to do is we have to use the sellers and their stops against them. Okay, that's the way you make money when you trade little reversals like that. What I mean by this is as the market, let me zoom in a bit closer on this for you, because you can see a couple examples of it here. As the market goes lower, if it goes lower here, right? If it goes lower here, you have to think there'll be a lot of bears down here, okay? Not a good place to sell, is it? Is this an area a good place to sell? I always tell my students, ask these two questions. How's my location and how is my momentum? Okay, these are the two important questions that usually tell us which of the entry patterns we should be using in our trade room. First of all, how's location? Location is great, right? We're at support with a range above us. Ranges are magnets. It's a great location, but that's where it ends. Momentum, not so good, right? As it goes lower, we're bearish in the short term. We're bearish in the long term. Not good momentum. So good location, that's nice, but momentum is a big problem. Momentum now tells me that if I want to be a buyer on this, I need some sort of catalyst, right? I need something that's going to give me some juice to go back higher again. And to get that juice, we're going to run some stops. The easiest money you'll ever make in any market, really, this is of course the S&P, but the easiest money you're going to make is when you can trap in the bears and buy right into those stop losses. Think about that same crown reversal pattern I talked about a moment ago on the Nasdaq. The bears come in, they try once, they go higher, they try twice, and a little trap below that low. That is a crown reversal, right? Those crown reversals are great. They take patience though. Okay, you can see a couple of them back here, right? See them back here, right here, and right here. They're kind of small, right? I'm obviously kind of simplifying it tonight. On the faster time frames though, you'll see them. They'll go down, they'll try once, go higher, try twice, trap low, back up. They'll go down, pull back, try once, up, got twice, trap low, and go higher. That same pattern, right? That same pattern I'm looking for off of that low. Makes sense? That's how you buy these things when you're hell of a bear market right now. But again, you're sitting at support, right? Again, great location for a long, but we have to get a catalyst, right? We have to get that edge, and to get that edge, we need to trap in those sellers. Okay, that's the way you buy that thing off the low. Now, let's say though, we take out that low. Right, let's say here we take out that low now, and now the bears are like, no, we're not messing around this time. They pull back and they blast, right, that low here. At this point now, what is that called? It's called a 1, 2, 3. Now remember, it doesn't matter how strong that first leg is. It doesn't matter how strong that move down. It doesn't matter how strong that move down is. They have to hold and blast. Hold and blast. If they don't, we're going back up into that trading range. But if they can pull back, and if they can get that big, strong blast going lower, and if you don't know what a strong blast looks like, come out and join me in the trade room, and I'll show you that right in real time. Or again, I go over like a lot of examples, like hundreds of examples of this in that free course that I mentioned earlier. So grab that, and you'll see what a big blast looks like in those videos. Now, 1, 2, 3 breakout. This one's easy. Mark that low, bring it up around that high, and as I've mentioned repeatedly here this week, I want to drill down and find those prior swings. Prior swings are where traps are. Usually traps are going to be the best possible entry. Get above the moving average, right? Above the moving average, that's where failures live, right? Failures here. As they go higher, buyers will come in, use their stops for a failure. And then as we go back below the moving average, hit that, right? Hit that pullback combination. Now, where is the target down here? Okay, when it comes to breakouts like this, the best thing you can think about is first leg and third leg. Okay, first leg and third leg, right? So the first leg for the breakout is the measuring leg. We find that channel and we pop, right, sell off that high. You can see a really good example back here. There was a small little range today. Okay, there's your breakout leg right there. That's first leg. Okay, there's your second leg and there's your third leg. Notice how first leg, third leg are pretty much identical. That's exactly what I'm talking about, right? So again, if we do break this thing lower, pop, big breakdown, we're not selling the first one, but if they can crush it and run lower, we grab that new channel, We look for that short, right? Again, whichever pattern we get off those highs, and we go first leg, third leg. That will help us fine tune that exit as we go lower. If the bears really get what they want tomorrow, 35.60 is the next big level down on the S&P. Now, real quickly here, what if we pop and grind? My favorite dance move in our trade room. I joke around with you guys, but this is a really serious pattern. What if we pop lower? And now we don't pull back to the moving average and blast, right? Now we pop lower and we start to grind and we grind and we grind, right? Again, these are very common these days because of all the catalysts we saw this week, all the Fed speakers, right? They could easily shake things up tomorrow as well. Draw that trend line off that low. Up around those highs. Mark those prior swings. And again, you want to get up on the high of that channel, get above some prior swings. And really at that point, it's whichever one we get, right? Traps, failures, pullback combos. And again, first leg is the measuring leg. Third leg, right, takes us out from there. Okay, once that pop, again, we're not selling into it. We're waiting for the confirmation and then looking for that trap, failure, pullback combo, first leg, third leg as we go. Okay, I should also tell you too, if something was to happen overnight, okay, something big happens overnight and the market gaps down, right? We open big gap down, right? And the market's just getting crushed, right? If it just collapses, we'll see, right? It could easily happen. We need to be ready for anything these days, right? You'll notice I don't make predictions, right? I look at the chart and I think, okay, the odds are saying this is what's probably going to happen, but you better be ready to be wrong about that assumption, and you got to have a game plan just in case something that you don't expect happens, right? This is why we plan our trades, and we trade our plan every evening on the video, and then the following day in our trade room. Bottom line, may not happen tomorrow, but hey, if it was to just simply get smoked, right? Big gap down into Asia, big sell-off here overnight. Anytime we see a really big move overnight, the first thing you want to think of is don't chase it and don't try to pick a bottom. The most important thing about this is it will be seen as being too low to sell. Okay, what I mean by that is if this market just collapses overnight and we get a big gap down, a big run in the overnight, something happens, news comes out, politicians say stupid things, right? Market collapses. If it really makes that big move, what you want to do is think about, we need to get a deep pullback to make it more attractive, right? Because if it makes a huge move down overnight, and again, I don't know how far it'll go, right? The market will freak out sometimes and just collapse or punch higher, right? Same idea. But it makes a big move overnight. The first thing you think of is wait for a nice, deep pullback. Now, how deep? Well, usually what I'll do is I'll go out and I'll find a bigger channel, right? Mark off that low, mark off that high, right? I'll try to get up around those larger channels. And most importantly, I want to get above the moving average. What you want to do is you want to get a good, decent pullback. And the common question I get in my trade room is how deep is deep enough? And the answer is very simple. Right when that little voice in your head says, oh my goodness, maybe this is a reversal, once that, and you'll notice, right? You'll notice it'll keep on going, and all of a sudden it will begin to accelerate. Right? It'll start to pop and run higher here. And you'll go, oh my goodness, maybe it's a reversal. Maybe they can go back. No. Bingo. That's exactly when it's time to think about the short. Now, we're not going to sell into it at this point. What we're going to do is now that we are disciplined and not going to chase it going higher, we wait for the buyers to come in who aren't prepared yet, who aren't watching this video, who don't have the experience. We let them come in and try to buy it. Remember, it's a very strong move down. So anytime we see a strong move, we expect what? A pullback and a retest of that low, right? Remember, strong move down, pullback, retest of that low. Rinse and repeat. Same thing over and over again. So again, if it makes a big move down, don't chase it. Don't try to buy it. Don't try to pick that bottom, because sometimes it'll drop and keep on grinding for a while. Very difficult trade against those here. Not what I would recommend especially for a new trader. However, once this thing starts to accelerate, right, and you'll feel it, you'll see it, you'll go, oh shoot, maybe they reversed it. Bingo. That's exactly when you want to think, okay, find that bigger channel. Oftentimes there'll be some prior low, right, you can use there as well. And the key at this point is get those buyers to commit. Once those buyers commit, bingo, you know exactly where their stops are. You know exactly where their pain is. And a lot of times with these big moves down like this, once the buyers realize they're wrong, they don't just get out of their trades, they reverse their positions, right? Once the buyers feel so foolish for getting fooled into that bounce, right, they'll oftentimes flip their positions, they'll sell out of their longs and then commit short. And again, all it does is it just adds more fuel to that move back down again, right? Does that make sense? Right? If it does, give me a hell yeah in the comment section. Give me a thumbs up while you're down there. And you better subscribe, because you can see I'm definitely bringing the good stuff here on these videos. These can be very challenging if you're not prepared for it. Anytime I see a big move overnight, the first thing I think of is don't chase it. Don't force the reversal. Wait for the pullback. Once it feels like those bulls are, oh my goodness, they're taking it. Nope, bingo. Look for the buyers come in and sell those stops, target back down to retest. It's one of the easiest game plans, really, as long as you're mentally prepared for it. Because boy, oh boy, it messes with your head. It'll make you feel like you have no idea what you're doing. Okay? Now, one last thing here on the NASDAQ. Let me back to the NASDAQ here real quick. The NASDAQ, you should be aware of this. The NASDAQ has a little bit of extra support down there at 11,023. Okay, the S&P is wide open spaces below that low. The NASDAQ, though, a little bit less, right? So as the NASDAQ goes lower, just be careful, right? When it's going to really break down below that 11,000 level, the NASDAQ seems to be more likely for a run lower, a crown reversal back up. My 2 cents, right? My 2 cents on that. S&P doesn't have that problem. The NASDAQ, though, has the 23.5 level right above that 11,000 big round number. S&P, though, S&P, wide open space. Right? Wide open. So plenty of space on the S&P. So keep it in mind tomorrow. I want to make sure you guys are aware of that little potential fake out breakout on the NASDAQ. Should we wrap things up with the oil? Oil, of course, been busy on oil the last couple of days with Hurricane Ian. Before I hit the record button tonight on this video, I checked the National Hurricane Center. It does sound like Hurricane Ian has regained its hurricane strength. However, and of course, my prayers go out to anybody in the path of this in Georgia, in the Carolinas right now. You guys are in for some pretty nasty weather the next couple of days here. It does look like, though, it has kind of, hooked a right, if you will, and won't affect the biggest portion of the oil producing part, right, of the U.S. Because that whole Gulf of Mexico, right, that gets whacked like it was Katrina a while back, right? That could really put this oil on blast, right? Really going higher here. So it does look like that is behind us now. But hey, tomorrow, though, like I mentioned, we've got that EU Energy Summit tomorrow morning. So who the heck knows what they're going to come up with tomorrow and try to, fix this mess they've gotten themselves into, right? We've all gotten ourselves into, right, with this whole Russian oil thing, right? So anyways, that's kind of the lingering aspect out there right here on the oil. There are 4 key insights here on oil right now. Again, it may not seem like that right now, but we do have a bear bias overall. Look at the daily chart. Look at a 4-hour chart. You'll see it's a bear bias overall. We do have a strong move lower, right? That's a pretty strong move down right there. Okay, that last strong move down says don't be surprised if bears come in and try to retest that low. Okay, got to make sure we're aware of that, because buying it right now, well, why would I buy it? Well, look at the third one. The third one is the range with rotation off the low. So now we know all about rotation off the low. We've talked about that quite a bit, right? It's basically a bull market into a trading range. And now as they rotate lower, again, there will be bears up here most likely, right? The bears will be waiting up here to sell back down into it. But these are the scenarios where you've got to A, be very careful selling into it because of that momentum, and B, this could really punch. It could easily punch, especially with a hurricane on the east coast of the U.S., the EU meeting here for tomorrow. Okay, that is a very, very big factor on this chart right now. And the fourth one might not be the easiest to see, but it's a spike in channel. Basically, if you were to widen this thing out a little bit, it's basically one big spike up yesterday into what is a kind of an ugly looking channel there. Now, why would I mention this? Well, because spike and channel patterns are notorious for pulling back into the base of their channel, right? Basically where that channel runs into the spike. So we oftentimes will see this thing pull back, right, into this area. The reason I mention this is because you got to be careful not to get fooled on a fake out breakout off of that low, right? This could easily be a 1, to right back up, right, to retest that high here. So be careful. You know, in all reality, this whole area really should be very careful being a seller right now, right? Markets love to go back and tap that last week's close, and then potentially with that spike and channel pattern right now, it may shoot right back up there. So be aware of that part of this analysis. So a lot of this will be quite similar, things we talked about already. As we're going higher here, right? As we're going higher, we know that bears are waiting up there. It's a long-term bear bias. Because of the short-term bullish momentum, though, we want that 1, we want that 2, and we definitely want that trap, right? That crown reversal will not only keep us at a troubled highs, remember, there'll be trend lines coming up here. That trap high right there will be very, very important to make money on that trade. Again, like I mentioned earlier, this is a very common scenario where traders will get in trouble up here. They'll try to sell into it, and it steamrolls right to those highs here. So be very careful shorting off that high. Let them try twice, grab that trap high, and finish them off back down to take out some of those lows down there. Also, too, if it does run up, if they hold that pullback and they blast. Now, again, remember, it doesn't matter how strong that first leg is, right? We see a lot of times big, strong legs. They don't hold the pullback, though. They got to hold that pullback, and they got to really blast going higher. If they can get that blast going higher now, if they can really punch and go higher, bingo. Now we've got $85 on our radar. Big round numbers on oil are very, very common magnets. And we go out, we find that channel, and we buy the first test. Because after all, the first test is the best test off of that low. Trap, failure, pullback combo, any of the entry patterns we talked about quite a bit already on this video. And I go into a lot more detail on those setups, of course, inside of that free trading course. The last one, of course, would be that, of course, that pop and grind, right? We pop up. We don't pull back to the moving average and then jump. We simply grind, right? We grind and we grind and we grind. Easy. That's an easy one, right? Mark off that high, mark off that low, find that prior, find those prior swings, get under prior swings, get under the moving average, right? Traps, failures, pullback combos, and we go. Don't forget, first leg, third leg, right? We know that 85, right? That 85 is a big magnet. First leg, third leg will help you refine that final exit there. Keep in mind, too, 86 half, 86 even. That's pretty much the next big block of resistance. If we can crack above these highs, it should be pretty easy for the buyers to finish off the 85 and potentially drift our way up to that 86 half level up overhead here. That really is something that you definitely can tell the buyers have potential for. Now, what if I'm wrong? What if we go lower, right? What if the market goes lower here? And first of all, could I buy off this low right now? That's a very strong move down, though. Anytime we see a strong move, the way you want to buy it is to trap in those bears with that crown reversal pattern, right, off of that low. If we go lower, right, we go lower, same thing, 1, 2. Now, if we go lower, right, if the market was to go lower here, and then we get that crown reversal here, okay? And again, remember, it's the base of that spike and channel. Right? That's why I say be careful down here settling into this area, because you get that range above you, spike and channel. Anyways, at this point now, it's definitely a good spot to be a buyer, but what is the problem? Momentum going lower will be a little bit stronger we'd like to be. So trapping those bears. Let them try once, let them try twice. Think about now where their stops are. Okay, and we'll buy into those stop losses. Now, once those stops get triggered, these markets, they love to roll higher here. And as they roll higher, your job isn't done yet. You can mark off those highs. You can find a new channel off that low, and you can grab that long off that low, right? Now, this pattern right here, right? This little 2-try failure into first channel test, right? Trap, failure, pullback entries off that channel. This can also be utilized on the S&P, on the Nasdaq, right? So it'll be a crown reversal on the S&P and the Nasdaq, and then as it rolls higher back into that range, grab that new channel. Okay, that'll give you a nice thank you for watching all the way to the end here tonight. A little bonus pattern for you can use on the S&P and the Nasdaq as well. Okay, that is something to look for tomorrow. If we do get that shot lower, right? That shot lower, take out the base of that spike and channel, trap in some of those bears, and then punch it going right back up into that trading range. You have to think these buyers, they want to get back up to retest those highs. Right? And then potentially even more, right? Up to the 85 level as we go. All right. Now, as we go lower here, let's say they do take out those lows. Let's say they do hold the pullback, right? And they blast and run lower. What is that? 1, 2, 3, breakout. 1, 2, 3, reversal. Mark that low, mark that high, drill down to your faster time frame, and don't miss that short off the high. First leg, third leg. Where do the bears want to get to? Where do they want to go? Well, they're going to want to go down to that low from yesterday, right? That 76.55. There's a big range down there you can see there as well. We'll want to use that first leg equals third leg tactic for finding the exits on this. So they do take out those lows. If they pull back to the 21 and they blast off that moving average, we know where they're going now. They're going to take out those lows down there. It's all about finding that channel now. Mark off that low, mark off that high, find those swings, find those traps, find those failures, and look for that short. And again, first leg, third leg, that'll give you a more refined exit, really squeeze out more profit on that trade short. Or we pop, right? We pop lower and we grind, right? Pop and grind, pop and grind. Easy one. Mark the low, mark that big high, find those swings, and don't miss, right? And don't miss that first pullback, right? Makes sense? Right? Market freaks out, right? Market just drops overnight, right? Big move down. What do? You wait for that deep pullback. How deep? Right about when the buyers look, they're taking control, and you flip it and sell into those stop losses, right? Big move down. Wait for that deep pullback. How deep? Right when it feels like those buyers are accelerating. Once it feels the buyers taking control, right? That's when you want to trap in those buyers and sell right into those stop losses for a retest of that low. So keep an eye on that. And again, be careful getting too aggressive as it goes lower here. I can definitely smell some bear traps waiting down below that low. All right, guys, hope you learned a bunch here tonight. Hope you use this strategy to make some money tomorrow. Don't forget, if you're looking for a great place to come out and learn and trade along with us every day, our trade room opens up every morning, 8 o'clock Eastern time. I'll be there tomorrow morning. I look forward to seeing you there, trading right along with us. I would recommend grab the free course first, learn the basic strategy, and then jump in with me in the trade room as a brand new student. You can easily call me in the office. I'll be here the rest of the day tonight, so don't be afraid to call if you guys have any questions. Don't be afraid to use live chat. And as always, you can drop questions in the comment section below. I'll put all the important links, all the free course links, all the membership links. I'll put all that stuff right in the description of the YouTube video. So grab that link, get registered, and I'll see you tomorrow morning. I'll see you every morning at the opening bell in our trade room. Guys, hope you enjoyed the video tonight. Now get some rest. Busy day tomorrow. As always, my name is Joseph. Be well. Be nice to each other. Thank you so much for watching, and be here next time. Adios, amigos. Bye-bye for now.